Let's bring in Evan Lucas, though, from IG to find out what he made of the session. Welcome to the program, Evan, on this Friday morning. So what do you make of the fact that we saw such strength in New York through most of the session on the back of these earnings reports, particularly from Caterpillar and 3M, which are those old industrial stalwarts of the U.S. market?
They are indeed, Nadine, and I think that's also interesting. If you look at Caterpillar, particularly from an Australian-centric point of view, that always has a bit of a feed to us as well. Considering how Caterpillar operates and the amount of operations it has here in Australia, you can look at 7 Group as a possible pickup on that. It was really, really nice numbers coming out of Caterpillar, and that is good to see, considering the last 3 quarters has been very difficult for them. The global shift away from commodities, the global shift away from engineering as a whole has seen Caterpillar slightly slide. They too still continue to grow and grow quite well, considering what the global environment is, and that's why last night was even more impressive. So Caterpillar was the one that I got a really good kick out of. It's why I think today you'll probably see materials recuperating some of yesterday's losses. There is certainly a number out of Caterpillar suggesting that they were really picking up in Latin America, also picking up in North America, but there was some growth also in their Asian division, so all of that's quite positive. 3M, as you alluded to, is always one very interesting stock to watch, but I think the interesting one now is what's happened post-market with Amazon and the fact that it was pretty horrible in terms of what you got out of those numbers. Everything looked weaker, not just than estimated, but what the company expected, and it's really showing that they might have to downgrade forecasts into the first quarter of next year. Fourth quarter already downgraded, and that's a real concern for a company that trades very much high in the 3-figure PE ratio. It's always been a concern about whether or not Amazon can continue to grow at the rate they had over the last 3 years. And then there's always those questions that comes about a Twitter, it comes about a Facebook, which are due next week, and the fact that they also trade on very high multiples and whether or not they'll make it. Facebook, I think, will. They are continuing to power ahead. Mobile advertising is incredibly strong for them, and they've certainly picked up over the last 2 quarters from what they've shown, and you'd expect that to carry out in Q3. So corporate earnings, getting back to the US session, is what is driving it. That's why we saw it up 1.8%, but as you alluded to, lost 0.5% in the back end of the day when we did hear around Ebola. There is also talk around about what now happens next Wednesday with the Fed. Inflation looks good. Obviously, we saw again those jobless claims coming in at 40-year lows. We've seen the non-farm payrolls back at levels that they want, well and truly above that 200,000 jobs added. So all of that's now leading into Thursday morning us here in Australia, Wednesday night over in the US, and that will be key for how the next 3 or 4 trading sessions actually work out.
Yeah, it's interesting that we've seen U.S. markets up around, well, close to 4% this week as we head toward the FOMC meeting. So what is this telling us about global growth? I guess putting it all together, we did have that read out of Europe overnight coming in slightly better than expected, but some of the devil, of course, in the detail, as always. But also interesting to note that the real power in that Caterpillar result was actually from North American, United States housing and commercial growth. So it appears as if U.S. growth is still well on track.
Yeah, and I think that's what you've got to look at out of that whole question you just posed is global growth. It's no doubt the US is the bright spot, and it's been the bright spot for quite a while, and that's why we did see a really big rally in the US dollar, not just for the fact that you were thinking about rates moving, but because it is probably the place to invest at the moment. It continues to show that it is powering ahead. It is well and truly starting to stand on its own 2 feet, which is again why the FOMC meeting on Wednesday will be very interesting. There are more and more investment banks asking the question whether considerable period will be moved from the statement. Reason for it, there is actually no scheduled meeting for November. It's very unlikely that they'll do anything in December when volumes are incredibly low because of Christmas, etc. So if they're going to remove it in 2014, it has to be next week. So looking at growth, the US is certainly the bright spot, and as you alluded to, corporate earnings are showing that. Top line numbers are looking at as well. Manufacturing, also services in the US are absolutely powering ahead. Services particularly is well and truly above 55 or more for the last 4 months. The interesting one I found was Europe. You obviously said yes, obviously it was better than expected. Spain, also what came out of Germany particularly, was really, really good. But the one that I continue to watch that is a real issue is France, and France is going backwards at a rate of knots. There is certainly a lot of issues politically, there's obviously issues economically, and that's the one that to watch. Italy continues to bobble along, and that's why Europe will remain a bit of a thorn in the side of this whole global growth story, and it's why the ECB is so important. So at the moment, yeah, absolutely agree. The US is still a very good place to be, but Europe, I find it very muddled and very messy, and that's why at the moment there are still a lot of concerns coming out of that part of the world.
Okay, let's talk here now for the ASX today. We saw the ASX retreating yesterday, and that was despite a better than expected manufacturing read out of China, and it was the materials space that really weighed on the market yesterday. No economic data of note expected today. Of course, we have the lead-in from the U.S. So, iron ore lifting slightly through the overnight period, gold down. Where do we look for direction?
Yeah, we'll have to come to the material space. The other thing you've got to probably be reminded about what's going on right now is the banking sector is now a week away from their major earnings season. So ANZ, Westpac, you also do get Macquarie in there as well, and NAB. They're all due Thursday, Friday, and then the Monday after, all out. And that's going to see a huge amount of capital injection. Reason for it is that you're going to get probably between around about 2.8 to as much as $3 billion in dividends being paid out by each company. And all that goes through as well. There's always a rally into those numbers. So that's where I'll expect to see support. We saw it yesterday. Most of them rallied. You again getting support from that banking space, and that makes up 24% of our index anyway. The material space will be interesting. The AGMs overnight in London from BHP and also from Rio saw muddled numbers. So BHP was up, Rio was down. You got no real major direction. I found the Sam Walsh news quite interesting, considering that again that could come back to Glencore. If he's on the board, if he's the CEO, there's obviously more and more reason why the merger won't happen. It's obviously been put on the back burner, but that again looks like a bit of a ward-off situation. So it's going to be whether or not there is any sort of consolidation in that space. And there was no news overnight that would say you're going to get a huge pop, but I wouldn't expect it to be negative because the whole momentum trade is there. And as we talked about at the start, Caterpillar being better, US growth being better, all of that probably spells, good things for things that are copper, good exposure with aluminium and nickel, all the industrial metals that have exposure to the home, and that's probably what we're going to see on the upside today. So not expecting a huge move, about 0.5% this morning, and it will mean the last 3 of the 4 weeks will be positive weeks on the ASX.
Yeah, and just quickly, looking around the region, we've got the US dollar yen pair is the real standout from the overnight period. So how will that likely affect trade in the Nikkei, which had a bit of a pullback yesterday after gangbusters, the prior session?
Yeah, that's right, and again it will probably be the complete opposite direction for what we saw yesterday. Dollar yen again continues to move up towards that 110 level, obviously in the 1.9. Every time the yen goes down, the Nikkei goes up. From what we can see and what we're calling, the Nikkei looks like moving up almost 2% on the open. It'll be very, very strong considering that the yen is moving lower and lower again. There is certainly moving into their earnings season over in Japan, and it does look quite rosy considering what we can hear. So that's what you'll be looking. It is a very, very hard market to trade. It is moving very, very quickly, and 2% moves in and out at the moment is not uncommon, and it will probably finish the week almost flat, and that's quite interesting considering we're talking about 2% moves in either direction. So Japan should be positive. It will probably lead our the rest of the region as well, but again it comes down to that pair and the inverse correlation with the equity index as well.
All right, Evan, thanks for joining us. We'll check in with you later.
Thanks, Nadine.
Evan Lucas from IG there in Melbourne.